Hi, I'm Tim Jubak, and this is my stock pick of the week for Jubak Asset Management. Stock pick of the week is Visa, ticker V. Okay, now there are two ways really to think about buying dividend yield stocks, and they're both valid. One is that you simply look for high dividends, like maybe above 4% right now, since the 10-year Treasury is at 4. And you look for companies that will be able to continue paying that dividend, but for some reason or other are depressed at the moment, so they're paying a high dividend. That's one possibility. The other possibility is you don't really worry about um, current yield, but you look for a stock that's going to be able to grow yield on a very predictable way so that what you're really doing is buying future dividend income. Visa fits that camp. And here's some numbers. Okay, so Visa right now pays a yield of a relatively piddling 0.8%. So we're not looking at a big current dividend. But if you look at it, that for the trailing, I mean, Visa makes its money out of a credit card assessment fee of 0.14% on every credit card transaction. So the growth in credit card transactions globally is really what fuels this, because Visa gets a hunk out of each of those. Trailing 12 months, 276 billion transactions, total payment value about 15 billion. Credit card issuers get more than they get 1 to 3%. Visa gets a smaller take, but of everybody's fees. The transaction growth in 2023 was about 10%. So total number of transactions went up. Total value of payments up about the same amount, 9%. The world is still going cashless. I mean, if you think that the US has made the full transition, you ought to come to Europe, where everything is put it on your card, put it on the card. $4 charge, put it on the card. And it's all contactless and YAML. It's all done and it's growing like crazy and everybody does it. The consensus EPS growth for 2024 is 13%. For 2025 is 14%. So you're looking at a stock that's able to produce a very consistent stream of earnings. The annual dividend growth over the last 5 years has been about 16% a year. So you're looking at starting from a very slow base, a very low base of 0.8%, but still growing that dividend about 15% a year. Most recent dividend hike was 15.6%. The payout ratio, which is what percentage of their revenue they're putting to paying out that dividend, is a very low 23%. So there's no real cash crunch here. So Morningstar says, hey, 15% sustainable dividend growth, 15% a year sustainable dividend growth over the next 5 years, no problem. So what you're doing is buying that 0.8% yield right now, PE of about, 25. So more than market's historical average, but lower than the PE on the market as a whole right now, which is around 30. So you're getting a pretty good stream of future dividends at a pretty reasonable price, and that's why Visa is in my Jubak's pick portfolio, has been for a long time, and is in my 50 stocks portfolio. And if it's not, when I check, I will put it in today. So thanks very much for watching. If you want to see more of my videos, please subscribe to my YouTube channel. That way you get notification of when the next one goes up. We haven't done one for a while, but I think we're going to be back in the stream. Toledo Mud Hens, University of Venice t-shirt transition. Soon it's all going to be Venice. You want more of my writing, my posts, at least one a day on my free site. That's jubakpicks.com. As I said, free, 3 portfolios, including a dividend portfolio. And the last is my Jubak pick, Jubak AM. That's Jubak Asset Management, jubakam.com site. That's a subscription site where I've got 6 portfolios, including those 3, and others about longer term and cheap stocks and volatility. So please subscribe to something. If you're new to me, you can get in for free at a number of different places, or at least subscribe to this video channel, and that way we're doing about 3 a week. So hope to see you again soon. Thanks very much for watching.